It's question
Okay.
80 on the soft copy revision kit on our group chat.
Okay.
Pursuit code.
Are you there?
I'm not there yet, madam.
Okay.
Kumbo, the way your eye is closing like this, I hope you will not sleep before the end of this class.
No, I won't.
All right. All right, madam. You can start and fire. Okay.
No, you say number 80. 80,
number 80,
Abi?
question 80.
Question 80.
Okay.
Go ahead, madam.
So
right,
prepare reports to the board of directors. Yeah.
Of PICO, that's one. Evaluates whether the acquisition of FCO would be beneficial to PICO and its shareholders. The free cash flow to firm method should be used to estimate the values of FCO and the combined company, assuming that the combined company's capital structure stays the same as that of PICO's current capital structure. Include all relevant calculations. 2, discusses the limitations of the estimated valuations in part 1 above. 3, estimates the amount of debt finance needed in addition to the cash reserves to acquire FCO and concludes whether PICO's current capital structure can be maintained. 4, explains the implications of a change in the capital structure of the combined company to the valuation method used in part 1 and how the issue can be resolved. 5, assesses whether the CFO's recommendation will provide a suitable defense against a bid from SGFCO and will be a viable option for PICO. Professional marks will be awarded in this question for the format, structure, and presentation of the report.
Okay, but before you move on to the B and C, something I really like. I'll be so excited if I in the exam and I saw the 5th question. The 5th question is very, very interesting to me. So 1st question says, assesses whether the CFO's recommendation will provide a suitable defense against a bid from SGFCO and would be a viable option for Pursuit Co. So remember our 6 defenses against hostile takeover, Abi? God, please, will P4 cover, the lectures cover P4. So that's 6 of them. Okay, so we'll see which of them this is as we just go through the question because it has to be scenario specific. Okay, well, when you finish reading the question, we'll just review it. So please go on.
B, assess how the global debt crisis may affect Pursuit Co.
So this kind of question we'll see maybe in one of the next few exams, one of the very next few exams, the question would have been, assess how the coronavirus, the COVID-19 virus crisis may affect Pursuit Co. And I'm not joking about it. That's the kind of thing you will see in strategic.
Even if you're not joking, we would have this one and passed, Brian. So we don't need that question.
You said what?
I said, even if you're not joking, we won't be writing that exam.
No, I'm saying that, oh, you think that it cannot happen in July, Abi? July is too close. I didn't get, as in, why do you think you will not write that exam?
I don't know. I don't think they will ask us. Like, COVID is not yet done now.
So the only thing is maybe it's too close. But if not, it is a very, very rife question for an exam. Okay, so let's move.
C, the CEO has heard that many companies in the industry use environmental reporting. Discuss what this would involve for PICO and the advantages and disadvantages to PICO of adding environmental reporting to its annual report.
Okay, so
Brian,
yes.
Is this an AFM topic? I thought it was SBL and all those APM.
But things like this that are very what's the proper word to use now? They are very, right, I'm looking for the proper word. What's the proper word for this? Contemporary concepts like this, whether it's P4, the idea is you have done ACCA, you're on your final paper or your semi-final paper, you're towards the end of your exams. You would have met environmental reporting before. Using your knowledge, that's why I say constantly that all the knowledge is never, it doesn't ever expire. There are some things that you've learned in F2, for example, that might come directly, and me and you have discussed this thing, particularly for things like P4 and P5. There are some things you learned in F2 that will be the difference between you passing the exam and someone that failed the exam. I'm not joking, as in from F2 directly, from F1, those kind of things. So you understand environmental reporting is not a hard thing to understand conceptually. It is environmental reporting about the environment. So you don't need to be very technical, like bringing C or PPP, ISA 14,001 and the rest of them. But you understand what environmental reporting entails. Reporting about your carbon footprint, your social footprint, those kind of things. And you know how that can become expensive for some organization. It can, however, have the advantage of focusing on what stakeholders and particularly shareholders really want to focus on, as compared to financial accounts that will focus just generally on what dogmatically financial reporting standards require. The issues, of course, again with environmental reporting is because environmental reporting doesn't have any defined structure, it means that comparison between companies in their environmental reports will be difficult. Environmental reporting is not, nobody, as in up till now, there are very few jurisdictions in the world where environmental reporting is mandatory. So if you prepare environmental reports, you might not have comparators within your own immediate environment for you to be able to carry out a proper analysis, whether you have done well or not. There are, of course, the beneficial parts of preparing environmental reports, with the fact that once you preparing environmental reports can give your shareholders and other external investors confidence about, because it shows a level of confidence on your own part for you to be able to trust yourself enough to prepare environmental reports. This can have direct impacts on profitability for a company, because investors and customers too will take the company's environmental footprint, especially where it is favorable, as a good sign, and then trust their products more and invest. Like I said, I always talk about the fact that I watch a lot of Dragon's Den, for example. And with Dragon's Den, you will see that we have investors like Deborah Meadin and the rest of them that are particular about environmentally friendly companies. And if a company is environmentally friendly, you will see that you will have a big sentiment towards investing in that company. And there will be customers like this around, especially developed world, that would be very, very sentimental about a company that has a good environmental stance. So having proper environmental stance reflected in your environmental reporting can have positive effects, even though there are challenges. So this thing now, it's not something that you need to be very technical about for you to be able to answer the question. Do you get my point?
Yes.
Okay, so we're good. We have 6 minutes to complete the question. So maybe what I'll do is to not disturb you at all, just allow you to fire down for those 6 minutes, and let's see where we can get to. Then when we come back on, I will now sit down and break the question down, and then we'll start working. Okay, so go ahead, madam.
Okay. Where's that?
Ify?
Pursuit, yeah. Pursuit Co., a listed company which manufactures electronic components, is interested in acquiring Foda Co., an unlisted company involved in the development of sophisticated but high-risk electronic products. The owners of FCO are a consortium of private equity investors who have been looking for a suitable buyer for their company for some time. PICO estimates that a payment of the equity value plus a 25% premium would be sufficient to secure the purchase of FCO. PICO would also pay off an outstanding debt that FCO owed. PICO wishes to acquire FCO using a combination of debt finance and its cash reserve of $20 million, such that the capital structure of the combined company remains at PICO's current capital structure level. Information on PICO and FCO. PICO has a market debt to equity ratio of 50 and an equity debt of equity beta of 1.18. Currently, PICO has a total firm value, market value of debt and equity combined of $140 million. PICO makes trade in US, Europe, and Asia, and has obtained some of its debt funding from international markets. FCO extracts from the statement of profit or loss for the year ended 20X1, 20X0, 20W9, and 20W8.
Okay, let me just pause you a bit.
Okay.
Let's catch our breaths more. We have time. What I'm interested in is, let's get to the end of this question before referee blow whistle. Okay, so what do we know? PICO, listed company. Okay, so I will not. Okay, so beta. So they've given us market value plus debt. So those things we were emphasizing in the former question have come back again. That's why I felt. Okay. So POSITCO has diversified sales. This is particularly important when you're making any discussion and the discursive aspects of the question. Okay, so we have that amount. So 2008 being the oldest year and 2011 being the most recent year, right? Is that fine? Looks kind of like the Lima question. It has a lot of Lima-like questions. Okay, so let's go ahead to the end. I'll try not to interrupt again so that we can get to the end of the question before we log out.
FCO extracts from the statement of profit or loss. You have sales revenue, operating profit, operating cost and tax allowable depreciation, net interest costs, profit before tax, taxation, after tax profit, dividend, retained earnings. FCO has a market debt to equity ratio of 10:90 and an estimated equity beta of 1.53. It can be assumed that its tax allowable depreciation is equivalent to the amount of investment needed to maintain current operational levels. However, FCO will require an additional investment in assets of 22 cents per $1 increase in sales revenue for the next 4 years. It is anticipated that FCO will pay interest at 9% on its future borrowings. For the next 4 years, FCO sales revenue will grow at the same average rate as the previous years. After the forecasted 4-year period, the growth rate of free cash flows will be half the initial forecast sales revenue growth rate for the foreseeable future.
So similar to what the complexity we saw in, what question was there? I think it was Lima, where they had that kind of thing. So they will first tell you something that you have to sit down and read. I told you from the beginning of the class about the way your examiner speaks English. Just complicates things. It's like yesterday's 25% and 75%, and then 20% of 75% and 80%, all those whole kind of things. You just complicate it unnecessarily. If there can be simpler ways to speak this English, but it says for the next 4 years, the sales growth will be the same as the average rate of the previous year. So I think that's where we're going to even start answering the question from. So we have to calculate growth first so that we can do valuation, because that's really what is happening here. So we can value that using that sales growth period. So first calculate the average growth rate for the last 4-year period so that we can grow okay, that's when we're doing the free cash flows. Then they said the growth rate of its free cash flows will be half of the initial forecast sales revenue growth for the foreseeable future. Okay. So in the first how many years?
4 years.
Okay. Well, let me get this now. For the